it feels like the markets have been somewhat backstopped by central bank plans. Everyone's looking for the next big catalyst now and starting to get a little bit concerned about what it might be. What's catching your eye this week?
If we have a look at this week, I think it's been a battle, as you mentioned, Kate, on the stimulus that's being provided by central banks around the world. We've seen an extraordinary package coming out of the US with Ben Bernanke's unlimited bond buying package, the European Central Bank with its bond buying, as well as the Bank of Japan and its acceleration of its easing. On the other hand, we've seen some poor data, and that's really stoked some growth concerns. If we have a look at some of those growth concerns, we've seen some warning signals coming out of transportation companies in the US, and transport companies do tend to be a bellwether of the economy, and we've seen warnings come out from the likes of both FedEx as well as Norfolk Southern this week. So that's a little bit of a warning bell, and of course we've seen those PMI indices coming out. We've seen the flash PMI out of China, and that, while it's stabilized from the August numbers, still showing the 11th month of contractions, and the Eurozone composite PMI coming out overnight at 45.9, with Germany's manufacturing numbers getting better, but France is getting worse. On the other hand, quantitative easing trading has continued, and that means the Australian market has been up for the week so far, up by 0.7% and up by 1.7% since the start of the month. In fact, the material sector has really outperformed. We've seen an increase of 1.4% for that area this week, and we've seen an increase of almost 10% for this month. So it's really the commodities which are winning in this stimulus game. So altogether, a very positive performance by markets as well as by the material space. But on the other hand, some of the data coming out this week has really been a cause for concern. And we're watching the Shanghai Composite, which reached a 3.5-year low yesterday. So hoping that we do see a bit of a bounce back today.
Okay, Julia, the S&P also changing indices expected today. What's the expected impact on stocks?
Standard & Poor's is going to come out to rebalance the ASX indices today. And I guess the big one that's being watched is the ASX 200. Now, the changes were announced on the 7th of September, so we probably have seen a bit of portfolio shuffling by fund managers ahead of these index changes. So we've already started to see an impact in terms of the shares involved. If we have a look at the additions, we'll see the likes of Dulux, SAI Global, as well as Skilled Engineering being added to the ASX 200 index. And overall, this tends to be a positive for these stocks because index fund managers will have to buy into these stocks to gain exposure to the ASX 200 index, if that's the benchmark that they track. So we have seen DLS up by 3% since that announcement was made. Skilled Engineering up by 2%. SAI Global, on the other hand, has seen a decrease. But the stocks which have been deleted, usually we see a negative impact for these stocks, the likes of Aquarius Platinum, Panoramic Resources, as well as Ramelius. But the fact that we have seen quantitative easing trading going on means that we have seen an uplift in these stocks and quite a dramatic reaction. Aquarius Platinum has been helped along by the platinum price, and its stock up by 30% since the 7th of September. We've seen Panoramic Resources up by 33%, and Ramelius actually up by 15%. So usually while we expect some sort of downward movement in the stocks which are to be removed from the ASX 200, we've actually seen the opposite, this quarterly rebalancing. So we will be watching those changes. They will occur after the bell today on the Aussie share market. So a bit of shuffling of the ASX 200.
Yeah, watching that at 10 a.m. I guess what else are you looking out for today, Julia? Because I can see our miners took a bit of a tumble in London trade overnight. Are you expecting some pain there today?
Ken, I think one of the things that was quite impressive about the Australian share market this week has been hitting that 4,400 point level, and we are expecting to see a little bit of consolidation around these levels. As you mentioned, the miners are going to be the ones coming under pressure today. We have a look at commodities. They did see red across the board. Gold prices down by just 0.1%, but we did see copper prices down by 1.4% in New York, and oil prices also continuing to ease, down by 0.2%. So we are expecting the miners to to put some downward pressure on the market. We have a look at how the Australian American depository receipts performed in New York. It gives us an idea of where the strength on our market might be. And we did see BHP ADRs down by 1.5%, but on the flip side, we did see Telstra up by 1.7%, while Westpac was down by 1.2%. So it does look like a bit of a defensive tilt to the end of the week, where we should see the areas like telecom, healthcare, utilities outperforming. And of course, that Spanish bond auction, where we did see the 10-year bonds, the yields there dropping. So that's a positive for the market. But all up, we are just expecting to see a bit of consolidation around these 4,400 point levels. But with quantitative easing in the backdrop, we should see continued medium-term support for those commodities.